The statistic that 90% of day traders fail is frequently cited and reflects the high risk nature of day trading. While the 90% statistic highlights the risk, it's not meant to discourage serious traders, but to underline the need for education, preparation, and discipline. Some traders do succeed, but they often have extensive knowledge, years of experience, and a strong grasp of risk management. What's going on, traders? Hope you guys are having a good week or weekend, depending on when you're watching this video. I hope you like the new setup, or I guess new reconstruction of the setup. I just got tired of standing up. I'm not too crazy about this angle because my monitor is kind of in the way of the shot, but at the same time, I can read my notes. And then this shot is beautiful. I love this. Probably going to use this type of setup more frequently. I just don't like standing up, and it's much more convenient to sit down. But yeah, this video is going to be more on the psychology side of day trading because in my mouth. Because as this industry is becoming much more popular and accessible to young adults, I tend to realize that a lot of people get discouraged much more quickly instead of waiting to see results at the finish, right? And it's because we live in a time where a lot of people don't have patience. I guess my generation, Gen Z specifically, we are trying to get fast money, which is okay. It's understandable. A lot of people want to get out certain situations. They're starting to realize that the traditional lifestyle of, going to school, getting your degree, and then working at a convenient job for the rest of your life isn't necessarily the only option, right? A lot of people are making careers online. A lot of people are starting businesses online, and they're starting to realize that those other options that our parents haven't really been able to see for themselves are actually possible. So in this video, I just want to talk about why 90% of traders fail and how to avoid being that 90%. At number one, we have lack of education and preparation. Many people enter day trading with little understanding of market dynamics, relying on trading gurus for tips and advice instead of thorough analysis. Successful trading requires knowledge of technical analysis, risk management, and market psychology. One of the main mistakes I made when I first started trading was relying on my favorite trader 24/7. Now, it's not bad to be inspired by a online trader. That's great. I know some people are inspired by me. But when it comes to relying on that person every single day, you tend to lean back from taking the initiative to learn things on your own time, right? Because if you have someone giving all this advice, why does it matter if I back test on the weekends or study market psychology or review my trades and my trading journal? And when you lean on that person 24/7, what happens if they don't feel like trading on Monday, Tuesday, Wednesday, Thursday? What if they want to take a break? What do you do now? You can't even pop up a chart on TradingView and analyze the direction of order flow because you're so obsessed with learning from someone that, you're inspired from. And again, there's nothing wrong with that, but it kind of takes away the purpose of becoming a day trader. And I think that purpose is to wake up on your own time, look at the charts on your own time, execute trades on your own time, and ultimately make money on your own time. When I first started trading, I did think it was only about profits. I seen the, flashy lifestyle, the Rolexes, the Lamborghinis, the penthouses, all that stuff. And I would always think to myself, how hard could this really be if people are making these type of XY results? I didn't realize that trading wasn't just about clicking buy and sell. It took me months to even grasp the foundations of what I was doing. And those foundations, they weren't just numbers or fancy charts. They were principles that changed the way I approached trading, money, and even my mindset. Day trading has changed lives. It's given people the power to take control of their financial future. But let's be real, this isn't a get-rich scheme. It's a skill, a craft, and just like any other craft, it requires the right tools and the willingness to learn. And when it comes to preparation, start small. Watch a few video tutorials, follow experienced traders, read the Candlestick Bible a few times, practice in a demo account before you put in your hard-earned work money, and build a plan. Stick to that plan, and once you're ready, execute. The information is out there. The internet has leveled the playing field. There's free videos, online courses, there's books, there's mentorship. It's all at your fingertips. You just have to take initiative. It's not about luck. It's about discipline and focus. Another reason why 90% of traders fail is because of emotional trading. Fear and greed often dictate decisions, leading traders to panic sell during losses or overextend during gains. Emotional reactions cloud judgment, making it hard to stick to a plan or strategy. As a 5 year or going into 5 years once this year ends, experienced day trader, there tends to be this conception that an experienced trader to my degree is supposed to be stoic. You know, whenever they lose or win a trade, no emotions. But I can't lie and hide the fact that emotions do still play a huge role. And I think a lot of professionals try to hide the fact that they do get excited on their wins and they do get frustrated on their losses. But we're supposed to remain stoic because that's like the status of a professional trader. But emotions play a huge role. I think the statistic was something like 80% is emotion psychology, 20% is technical analysis, something like that. But I have a few notes that I want to read to you guys that I think will help you guys improve when it comes to managing your emotions. So, of course, you want to have a plan and stick to it. Emotions often take over when you don't have clear rules to follow. What you want to do is create a solid plan that outlines your entry and exit points, risk tolerance, and strategy. And I think that comes with anything you do in life. Don't really think about what you feel like doing, what you feel like don't doing. You just have to do it and stick to that. Versus the people that are in that 10% range, they can see that greater outcome because they put their emotion to the side. They hold their trades, they don't let it discourage them, and they keep going. And that goes into the next point. Practice emotional awareness. Emotions like fear, greed, and frustration can cloud your judgment. Recognize when these emotions arise. Use deep breathing, meditation, or mindfulness techniques to stay calm. I mentioned this in a video, in one of the recap videos I posted. One thing that I do is watch like Naruto clips. Like when I'm in a trade and I think it's gonna go wrong and I'm getting a bit, anxious about it, I just go on YouTube. I watch some Naruto clips, Naruto theories because I love anime. It calms me down a bit. Do what you have to do. Meditate if that's what you do. Breathe if that's what you do. Just don't overreact. Let the trade play out. Trust your system because you're not always gonna win. That's another thing you have to keep in mind. You're gonna lose some trades. But if you can't control your emotions, how do you expect to hold your trades when they're actually about to reverse and hit your take profit? And that's going to mess up your system or strategy that you're implementing into your journal. Because if you're always exiting your trades before it hits TP because you get afraid, you get scared, you have anxiety, then this industry might not be for you. So find something to meditate on while you're in a trade so that it can play out all the way. You just want to find a technique to implement that will allow you to stay calm as a day trader. Next, we have avoid overtrading. Chasing losses or revenge trading often leads to more significant losses. Stick to your pre-planned number of trades per day. Once you hit your limit, stop trading. This is a huge one. I remember when I first started, I would always try to get back in the market whenever I lost to try to end my day in profit, but over the course of time, what I learned is that ruins your weekly percentage goal. If you're risking maybe 2% a day and you're trying to reach that 10% mark by the end of the week, well, if you hop in a trade risking 2% and that loses, and you hop in again, hopefully to hit break even or end the day in profit, you're already going against your plan, right? Let's say that trade goes haywire. Now, the next day, it's going to be much harder to reach break even or even in the week in profit since you're already 4% down or in drawdown. I think that's a skill to really adapt in, right beside discipline, because you'll hop into a trade and you'll see another setup, another clean setup that you could have executed on, and your first trade goes haywire. You want to hop into the next one that looks better, but you can't go against your plan. So avoid over trading, avoid putting in multiple positions, just focus on one trade or how many trades it takes to reach that daily or weekly percent goal. Next, we have build confidence through education. A lack of confidence can make you second guess yourself. Keep learning about the markets, strategies, and psychology. The more you know, the less fear will control you. You never want to get too comfortable. You're always a student. I consider myself a student to this day. I will never consider myself a professional because I'm always learning. I'm always improving. I'm always getting better. I think one of the most beautiful parts about this industry is that you can lose, but you can learn from your losses and improve every single day. And if you have a good strategy, your wins are going to outweigh your losses. So either way, losing is inevitable. You're going to lose. But the only difference is when you lose, you can learn and improve. Is that a bar? When you lose, improve. Does that rhyme? Lose, improve? That felt really good saying it. I don't know. Next, we have keeping a trading journal. Reflecting on trades helps you identify patterns in your decision making. Track not just the technical aspects, but also your emotions during trades. Learn from past mistakes and successes. When I first started, I was about 2 years deep without a journal. And for the longest time, put this right here. That's better. Sorry about that, guys. For the longest time, I didn't think having a trading journal was that important. I just realized I left all that in the shot. Hopefully it wasn't blurry. But for the longest time, I thought having a trading journal wasn't important. Once I started documenting my journey, I found more success. And I think the reason why was because I was able to backtrack and learn from my mistakes and visually see what went wrong. I think that's the main purpose of a journal. It's supposed to highlight gaps that you can improve in, depending on how you have it set up. If you have your entry, exit, the time you entered, the time you exited, the date, the pair. Over the course of time, you'll see if the strategy that you're using is worth it. And I want you guys to remember that day trading is a marathon, not a sprint. Your emotions are natural, but they don't have to control you. With discipline, practice, and a focus on the process rather than the outcome, you can master your emotions and trade with clarity and confidence. Another reason why 90% of day traders fail is because of poor risk management. A lack of risk management strategies, such as setting stop loss orders or position sizing, can lead to significant losses. Many traders risk too much capital on a single trade, wiping out accounts quickly. The first thing I had to understand was risk management. That was literally my aha moment because when I first started trading, I didn't really understand um, how to scale up and how to really focus on having that percent goal for the week, like I talked about previously. I learned pretty quickly that trading wasn't about chasing wins. It was about protecting what I already had. So I set strict rules for myself, such as risking no more than 1% on a trade, or I'm sorry, risking no more than 2% on a trade. And that single rule alone saved my account several times. Another reason why 90% of traders fail is due to unrealistic expectations. I had to close my eyes saying that because I can't tell you how many times now I go on TikTok and so many people are, expecting to see results within a year or even 2 years. I think that's crazy. And I could be pretty biased because I didn't really see results until my third year. And I see people making results within a year, which is great, but it's just unrealistic. I think that's more of a luck factor. If I'm gonna be honest, you seeing results from like 6 months to a year is just crazy to me. In my opinion, you should be trading in a demo account for your first year. And I know a lot of people are gonna hate that advice, but I think it's more realistic because the markets aren't going anywhere. But the more you try to rush the process, you're gonna end up yourself over, if that's the best way I can put it out there. Many traders expect quick and substantial profits without recognizing the steep learning curve. Day trading is often marketed as a get rich scheme, which creates false narratives and expectations. One of the main reasons why I pivoted from forex to futures was because that narrative was oversaturated. That get rich scheme lifestyle, forex was oversaturated with those type of gurus online, and it just made the professionals, the people that actually been in this industry long enough to see results, look bad. Day trading isn't just about the Lamborghinis, the fancy dinners. It's about having the freedom and the ability to invest into other areas in your life that you're passionate about. At least that's the reason why I got into this industry, because I have other things I'm passionate about and I'm not too focused on the lifestyle. I'm more focused on the freedom, being able to do what I want on my own time and ultimately making a career out of it. Another reason why 90% of day traders fail is due to market volatility. The short-term nature of day trading exposes traders to high volatility and unpredictable price swings. Without a solid strategy, navigating these rapid changes becomes overwhelming. Big moves in the market caused by high impact news, like the consumer price index, can very easily blow your account if you have no knowledge on fundamental analysis. Funny story, I remember, I think back in 2020 when I was live streaming on YouTube, I was trading NFP every Friday. I no longer trade NFP specifically, but I would use this strategy where I would use the sentiment of price on a specific website to predict the volatility of where price is going to head to after that 8:30 candle. And when I first started using it, It was working, but over the course of time, right when I was about to enter on that trade, or as I did enter live, my trade would just go haywire. Like it would wick to my stop loss and then shoot up to my take profit. And every Friday of the first month, I kept using that strategy, but it wasn't working. And eventually, it just looked like gambling, if I'm being completely honest. Long story short, I blew my account live streaming, and it was the most embarrassing thing ever. But that was because of market volatility and believing that trading news was the best thing ever, which isn't the case. Trading news is very risky, depending on how you're approaching fundamental analysis, which I talked about in one video. The main point is market volatility, depending if you're trading news or a certain asset, can make or break you. The next reason why 90% of day traders fail is due to the lack of discipline. This might be the most important section, but discipline goes a long way. Deviating from a trading plan or failing to stick to predetermined rules often leads to poor outcomes. Discipline is crucial for consistently executing strategies and minimizing impulsive trades. We all talk about discipline like it's this magical switch we can flip to achieve our goals. But here's the harsh truth. You can't build strong discipline on a foundation of bad habits. It's like trying to run a marathon with a sprained ankle. You're setting yourself up to fail. Discipline isn't just about willpower in the moment. It's about the habits you built beforehand. Let me ask you something. How often do you say you'll start tomorrow, but tonight you stay up late binge watching shows? Or how often do you promise yourself you'll eat healthier, but end up grabbing fast food because it's convenient? These small choices might feel insignificant, but they're not. They're habits, and habits shape your discipline. There was a time in my journey where I felt stuck. I had really big goals, but no matter how hard I tried, I was never consistent. And it wasn't because I was lazy or it wasn't because I wasn't good at trading. It was because of my daily habits and my daily routine. I had horrible routines, and those routines funneled into my trading performance. I would start strong, and then weeks later, I would fall back into my old habits. But that all changed once I found this book called Atomic Habits. And this book right here honestly changed my life and changed my perspective on areas of my life that I struggled with when it comes to habits. So, Atomic Habits by James Clear pretty much underlines the importance of having a foundation of routine and making strong, adaptable changes in your life. And when it comes to changes, they were built on the foundation of positive habits. I did talk about this in a video in the bootcamp series as well, but I highly recommend you guys pick this book up because it can all be applied to day trading. The small things you do every day, waking up, pulling up your chart, journaling your trades, those small habits are going to build strong, remarkable results over time. And I say all that to say that discipline doesn't come from sheer willpower. It's built on the foundation of your daily choices. What habits are you creating today to support the person you want to become tomorrow? The answer to that question will determine your success. I hope you guys enjoyed this video. If this was helpful in any way, a like or comment would be greatly appreciated. And let me know if you have any questions. But I'm not going to trade too much this month as the holidays are approaching because the markets tend to slow down. But I am going to focus on putting out this free course that I'm working on TikTok. So make sure you guys follow me there for free videos. Until then, catch you guys in the next one. Happy holidays. I'm out. Peace.